Oh, we're here. We're here. We're live. We're ready. I think we got it going. So, quick recap. I just want to talk about a few things. I don't know, I'm working on this. So, I'm getting back into writing and I'm just writing recaps for the market every day. So, I am trying to get into the habit of, just talking about it since I already wrote it down, might as well talk about it a little bit. So, real quick, let's go over the big guys. That's what we're going to call the four indices. So we have the Dow, we have the Nasdaq, we have the S&P, and we have the Russell 2000. Everything fell mostly flat today. The Dow being up 0.47%. Nasdaq fell by 36 points or 0.16%. S&P 500 was flat. It rose by zero point 0.2 points, but it's still 0%. And then we have the Russell 2000. It fell 0.47%, almost half a percent. So a lot of things are mostly just flat today. And then if we look at a lot of the advancing declining issues on the New York Stock Exchange, it's almost dead even, 47 to 49. We have new highs, new lows. It's a little bit higher, 58% new highs today. We have the SMA 50 and the SMA 200. So above the SMA 50 is about even, about flat. And looking at the SMA 200, we have just slightly above break even with tickers crossing over the SMA 200. So, relatively flat day. Not a whole lot going on here. It's could be related to a lot of different things. What I'm seeing is a lot of people are relating it to the government shutdown. And, I mean, could be. Call it what you want. But in some other news, we have the charts, good old bar charts. We can see the one-day performance, consumer cyclical. It was a leading guy in the race here today, up 0.9%, almost a full percent. And we could dig into what consumer cyclical is here in a second. But I want to talk about basic materials because they fell 3.29% today after being one of the best performers the day before. So that's just a crazy switch up. It's interesting to see nonetheless. And then on the 1 week performance, we have consumer cyclical. They're up 1.99%. Healthcare is in close second with a 1.97, and then real estate's right there in third with 1.95. And I mean, honestly, if you want to look at communication services, they're just behind that. I mean, they're all within 0.07 with each other. I mean, so they're all doing pretty well. But we do have basic materials down 3.12%. So basic materials, basic mats just aren't really doing great. We go and we look at all of the charts. There's 48 pages, so there's really not a whole lot we're gonna get through here. But just kind of browsing at some of these charts, we can see some of the lines drawn in, and there's a lot of wedging in those first three. There's another wedge there. Some nice channels coming up here. This one, AD&T, looks like it's about to bounce off this bottom channel. So could be something there. This AGH is a huge breakout off of that. Let's jump into here about the middle of the pack. And these tickers are across all the exchanges, across all the indexes, and they're any market cap. So, you kind of have to take it for what it is. I mean, we're just looking at the consumer cyclical sector. If we went through market cap and we looked at, let's say, we'll look at mid caps. We'll get, there's 12 pages there. It's not too bad. And then if we relate these to only US countries, it's only 10 pages. Still, I'm not going to go through all of this, but just to kind of browse at some charts, get a general feel of how things are moving, at least in the consumer cyclical sector. Try saying that a bunch of times fast. Um, yeah, I don't know if there's a whole lot to be gathered here. I mean, other than just getting familiar with some of these charts and some of these tickers. I mean, well, yeah, that's Wingstop. There's Yeti Holdings. What is this? Wolverine Worldwide. Not too bad. But same thing with basic materials. If we limit these to about mid caps, and then we throw these USA, there's 4 pages. That's not bad. But that means we might be needing to look into a different either market cap or different country for, like where these like weightings are, because something's dragging them down and it doesn't look like it's some of these stocks. I don't know. So that being said, we can take a look at Beyond Meats. That was one we talked about yesterday. It's another one that I want to talk about today because look at that chart. Let's pull this up. Look at this. So this is yesterday. This is today. These gaps are insane. It's coming right back up to where it once was. It's sitting around in this $2-3 area. It seems like it touched $3 a couple times in the past. This is September. Yeah, so all of, I wish I could just, I can't just draw. All of this area is September, and then right here is where we get to October. So all of this area is trading in and around that like 285, $3 area, not really a sector, but $3 area, almost at sector again. Sector, I barely even know her. But the thing is, with Beyond Meat, they finished, what is this? They finished with 146% gain today. They finished with 127% gain yesterday. I mean, call it what you want. A lot of people are calling it a short squeeze. They're calling it a meme stock. They're calling it this. They're calling it that. But, I mean, they are announcing this expanded distribution deal with Walmart. It's going to give them a new 6-pack of Beyond Burgers, 2,000 stores nationwide. 2,000 probably isn't a lot of stores in the grand scheme of things, but they did announce that they're distributing more, to Walmart. And, I can't confirm if it's true or not, but I was talking to somebody today, and they were saying that there is actually a shortage on beef. And with that, so I'm kind of quoting here, and it says there's a massive disruption in the beef market, but beef prices are high, supply is down. Importing beef is just not helping because there is new disease showing up. It's called the screw fly, which is interesting. I might even look that up. Hopefully, I don't get something terrible. What is screw fly disease, or is it a insect? Huh. Okay. So it's not a disease, or it is a disease, but it's an infestation by a parasite. from the screwworm fly. The adult screwworm is a type of fly, and the dangerous phase is when the fly lays eggs on open wounds or mucous membranes of warm-blooded animals, including livestock and sometimes humans. Tissue damage, or as I recently watched The King with Timothy Chalamet. It's a great movie, but he says tissue. So tissue damage, potentially fatal infections. It's called myiasis. Probably didn't say that right. But they consume the tissue and the dead flesh. Primarily affects livestock where there are open wounds. There's no specific medication. It says it was eradicated in the U.S. and parts of Central America. It's recently reemerged in some regions. I mean, there could be some truth to that, you know. And I mean, Beyond Meat just happened to be right place, right time, and it's even weirder in my opinion. It's weird because look at this earnings. Let's jump back a little bit. Maybe we can get some more. Yeah, okay, so we can scroll. So there's 1, 2, 3 red earnings. They're 1 for 4, 5, 6, 7, 8, 9, 10 out of 10. They're 3 out of 10. 4 out of 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. I'm stopping there. Out of 20 quarters of reporting, they've only been profitable 5 times. And I'm like, if that, it may have just been 4, but that's just not good, man. Let's see, 1, 2, 3, 4, 4 times out of the last 20 quarters. That's not great. In my opinion, it's not great. So, I mean, it explains why they're a $3 stock, but all things considered, they're moving up. They're moving up substantially, and that's good, at least for opportunity to make a profit. If we're looking at the RSI, it still hasn't breached 70, so that's really good to see. It means that there's a lot of potential for more upwards movement. In the RSI's definition, we're not overbought yet, so there's still some room to grow. Money flow index signifies that there's a lot of buying pressure. There's volume behind it. There's buying pressure going into it. So, I mean, we're clearly, we're seeing it play out in real time. So, fascinating one to keep watch of. I mean, they're still moving up. It's 11% after hours. So, it's just it's another thing to keep your eyes on. Jumping over into earnings, we're just gonna kind of quickly touch this and then we'll get out of here. But we're gonna talk about GE, we're gonna talk about BAC, and we're gonna talk about KO. So starting strong here with General Motors. It was the biggest single day gain in 6 years, which is fantastic for GM. They reported earnings, they beat, let's see, we can describe it right here. So it was reported 280, the estimate was 228. It's a 22% surprise, estimate surprise, really good. EPS was 135, the estimate was 2.11, 116 if you will. So they missed on the EPS, but it was 36% surprise. But they also beat on revenue. They reported 48. The estimate was 45. So there's about almost an 8% increase there in revenue, or 8% surprise difference whenever it came to revenue. But I don't think, and I think it's kind of the trend lately that earnings are becoming slightly less important, and what people are more focusing on is the guidance. on companies. It's not what they're doing now, it's where they're going in the future. What's on the docket for the next quarter or the quarter after or the next year. And so I think a lot of investors are taking note of what the guidance is looking like moving out into the more long-term picture of things. So with their guidance, tariff relief, the strong Turk sales, I mean, that's good to know. They declared a quarterly dividend. Oof. Doug Dimmadome, owner of the Dougsdale Dimmadome. Um, and then I actually don't know much about this BrightDrop electric van business, but I mean, hey, if they're slowly winding down or coming off of electric vehicles in some instances, it might be pretty good for them. They opened today at 63. They closed yesterday at 58. So they jumped. I mean, you can see it on the chart, but they jumped up, man. It's pretty good for GM. Uh, RSI is sitting around about a 74, signifying it's overbought. It doesn't seem like there's much more room to go up, but this could be a classic case of post earnings announcement drift. We could be seeing something here with just the sheer momentum of the move today. It could be carried further higher, further, whichever one you want to say. So could be a classic example of post earnings announcement drift. It's something to keep your eyes on. It on top of the dividends, quarterly dividend. They might increase it. It seems like it increased, stayed about the same the last 2 quarters, but it increased over the first quarter by 3 cents. But moving on to Bank of America, we have them. They reported earnings. It was mostly flat. So, I mean, spot on with the estimates, which is hilarious. I think that might be the first time I've seen that, but they fell right in step with estimations, and that led them to just a mostly flat trading day. They really didn't have to do a whole lot. It looks like they're consolidating right here in this $50 area, and they're staying right above the moving averages, the 50 and the 20. So they're sitting right around their relative highs, which could mean that there's not a lot of room upwards to grow, but this could also be signifying a breakout. Could also be setting up for a fall. Who knows? We're looking at the RSI. It's starting to take a dip down. It's coming closer to the 50 line than it is climbing towards that 70 line. It's a little choppy right now. The money flow index is almost right in step with that. It's kind of flattening out a little bit. Doesn't really signify that there's a whole lot of buying pressure coming into there or the volume going into it as well. So financials still sitting pretty flat. Coca-Cola, however, they beat 5% surprise on EPS. The GAAP EPS was a 14% surprise, and the revenue was about a 0.5%. So they raised their free cash flow guidance. They reaffirmed their full year outlook, and then they're selling a 75% stake in Coca-Cola Beverages Africa, which is interesting. I'll have to look into that, see what that's all about. But it led them to a modest 4% gain, taking them from 70 to 71 after closing yesterday at 68. So they closed at 68. They opened at 70. $2 jump. It's pretty good, man. After hours are starting to wind down a little bit, and then the RSI is showing about a 72. So they're slightly in that overbought territory. This could come back down. I don't think this is going to be a case of post earnings announcement drift. I think we might just see the stock fall back into this zone, this 68, 69 area. Hopefully it'll bounce right here on this 200 moving average because that's sitting at, what is that now? 68.88. So we might see a nice touch here and then it'll bounce back up, but I have to wait and see. The money flow index is pointing about the same. It's at a 70. Could signify that it's overbought. That's if you do it that way. I like to keep both the RSI and the MFI in the 70-30 range. The chart here is set up for the 80-20 range. Now, it technically in this chart hasn't hit that overbought area on the money flow index, but keeping it in line with the RSI, we're sitting right on that area. So at least the RSI and the MFI are a little bit in a convergence there, or they're running parallel, if you will. But that is going to wrap it all up. If there's anything you guys want to talk about, feel free to let me know. I don't have much else for you guys today. Actually, one quick thing. Netflix, they just reported earnings. They are falling 6%. They missed on Q3 earnings, but profit is below expectations. And that's going to be interesting to see how they follow through tomorrow. Wow, 619 million tax charge is crazy. A modest Q4 guidance. So it's an interesting note to me. You know, as far as the guidance theory goes, that investors are looking way more towards the guidance than they almost are with the earnings. A modest Q4 guidance and announces a major global toy licensing deal for K-pop Demon Hunters. Never seen it. Heard it was all right. These guys, good to look into. If we jump over, just open another tab real quick. Not what I wanted. Not what I wanted. We're here. Yeah, we might see this moving upwards. Yeah. Anyways, might be something to watch there. Netflix might be worth a watch for some short action, some downside action. Do your short calls, or you can do your puts, depending on your preference on options. Or, hey, might be a good time to buy. Scoop up some shares, increase that portfolio, get in with a solid company. But yeah, on the Netflix earnings miss, that's going to wrap it up for me. I hope you guys have a great evening. Good luck in the markets out there. And remember, if you didn't lose money,